All right, good morning, guys. Today is Friday, June 16th. As usual, we'll be going over analysis for US 30, gold, and EU. So US 30, this is what I'm looking for is this trend line right here to the upside. So they're definitely dropping. US 30 will drop either probably Sunday, given that today is Friday. They might keep faking up to the upside. But if we do get a nice volume closure below this trend line and then a retest and closure below, or closure below the 9 EMA on the hourly and then retest and closure below, US 30 will dip heavily. So I wouldn't expect it to be today unless we get that nice closure with volume. Because right now you can see we closed above the hourly trend line again. And then this current hourly candle is retesting the trend line and looks like it will close above. So in any case, US 30 might be, given that it's Friday, they might keep pushing up US 30, but we need to wait for this current hourly candle to see where they will close it at. But personally, I'm in a gold sell. So I saw gold break this 4-hour bearish high and bearish low. And also when I turned on the zones indicator, we are literally in sell zones for gold. So there's no bullish order block. So right now gold is rejecting from from a demand zone. We have an hourly bullish high here, hourly bullish low. So this is how I use the zones and markups indicators in tandem. So if here all I can see is 30-minute bearish high, 15-minute bearish high, and also 4-hour bearish high and low. So for me, I like trading like 1 hour and above order blocks as opposed to just low time frame like 15-minute and 30-minute order blocks by themselves. So here when I saw we had a 4-hour bearish high, what I would have wanted to see, or what I wanted to see when I turn on the zones indicator, is to see a bunch of sellers. And you can see, right, by turning on the zones indicator, you can see we just have red, red, red all the way up here. So when I saw that, I literally just entered into the sell. I looked for an entry. So I waited for closure below the 4-hour bearish high, and then I waited for a retest. So you can see this candle closed below the 4-hour bearish high and also around the 4-hour bearish low. The next 5-minute candle retested the 4-hour bearish high and closed below, and at that point I entered into a sell for gold. So not to say that they cannot manipulate it back to the upside, but that was an easy sell that I was able to take on gold. US 30, we need this hourly candle to close. So US 30, I'm literally watching what happens on this hourly trend line. If you turn on the zones for US 30, you can see currently we're in a heavy supply zone. However, for US 30, as opposed to gold, US 30, we do not have any bearish order blocks, but we do have a bullish order block for US 30. So we have an hourly bullish high and low, and then price is also in a demand zone. So right now, my bias for US 30 is more of a buy than a sell. As much as it looks overextended, sellers don't really have, I know previously looking to the left here, this can be a hourly bearish high and low. However, given that it's Friday, I'm more skewed towards buys for US 30. However, I'm not going to take it. It's just too risky. Even buys are risky because I don't like trading in a trend line like this where price is breaking below the trend line and then breaking back above. That's just a recipe for getting faked out. And if I was to trade here, honestly, I would rather take sells for US 30, but to avoid getting faked out, I would probably use like a 500 pip stop loss and 500 pip TP, meaning that it's a trade I would hold for like 5 days or so, because a 500 pip move on US 30 is a heavy move. But for me, for sells, what I would want to see to take a nice sell on US 30, I would want to see, where is this thing? I would want to see this happen. Want to see this hourly candle close below this trend line and preferably below the 9 EMA. And then we get a retest. I wouldn't enter the sell there just yet. And then we get a retest of the 9 EMA or retest of trend line and then closure again below. Then at that point, that's the only time I would take a sell on US 30 to ride price back down. So to me, this looks more of a swing trade than anything, but we need that proper confirmation. So gold, I'm in that sell for gold already. GJ, we got stopped out of the GJ trade that I sent yesterday. Unfortunately, literally all the what are they called? All the minor pairs or all the minor trades I've ever sent, all of them have hit stop loss. But wait, okay, yeah, most of them just got into a few pips in profit. Even GJ yesterday actually dropped quite heavy and then came back up. But yesterday we did have heavy news on GJ, like at around 11 p.m. Eastern Standard Time, and that pumped GJ all the way to the top. And this is even with a 200 pip stop loss, right? Because our stop loss on GJ was 200. So that's a very heavy move. So this is one of those trades I say, if you're comfortable doing that and holding a trade for like a day or two, right, you can double your TP and double your stop loss. So this is one of those trades. It was a valid trade. Our stop loss was like 200 pips. That is a heavy and wide stop loss. So this is one of those trades. If you get stopped out, you're like, okay, then right at that point, there's nothing you could really have done, but we risked only 1%. So that's the importance of having a static TP and stop loss. So for GJ right now, what I would do for GJ is to zone out, right? So come here, use the indicators, the zones indicator. So we are definitely in sell zones here. However, we do not have any bearish order blocks to bring GJ all the way back down. Even zooming out to the daily, the last time GJ was in this area, and let me turn off the zones for now because I do know we're in a sell order block for GJ on the daily, but the last time GJ was anywhere around this area was 2000 and 2015. What's that, like eight years ago? Yeah, so 8 years ago. So when we reach so daily, let me turn on those zones again and then go to maybe a smaller time frame like the 4 hour. All right, perfect. So on the 4 hours, yeah, this is, yeah, GJ hasn't been here for like 8 years, so it's one of those things that I wouldn't try to mess with. But if I were to anticipate where GJ is going, let me turn off this markups and just have a naked chart. Based on where we are, turn this off. And looking at completion of structure, honestly, GJ probably can go to 188, 186 area. However, that retracement would be a nice reversal. So right now, since we got, so this is how I normally play reversals, right? So if you get stopped out, like right now, we got stopped out on GJ on the 5 minute, right? So what I would now do for GJ is move to the 15-minute time frame and look for a reversal entry on the 15-minute time frame. So all my reversal entries start on the 5 minute. If I get stopped out, I wait for a signal on the 15-minute time frame. If I were to enter a sell on the 15-minute time frame and then I get stopped out, I would move to the next time frame and the next time frame, because as you keep moving to a higher time frame, you get better entries, and more than like, so if you get faked out of a 5 minute reversal, 15-minute reversal, 30-minute, 1 hour, the probability of that happening is less than, I would say less than 10%, less than 10%. So you see, like right now on the 15-minute time frame, the last sell on the reversal was around where we had a reversal on the 5 minute, because this reversal, this entry that we got stopped out of was on the 5 minute. So the last sell on the 15-minute was literally like around when we had the entry on the 5 minute. So for me on GJ, I would rather wait for a sell on the 15-minute. And for GJ, I'll do the same thing. I'll do a 200 pip TP and stop loss. And then for that one, I'll probably go for a heavier risk. So I risked 1% for this trade that I went with. Personally, for the next sell for GJ, I'll probably go for a 2% risk. But if I do find it and I send it to you guys, I'll send it with a 1% risk for you guys. I never give you guys any entries that are more than 1% risk, because it just goes against my rules. But personally, like if I'm trading that trade personally, I can go even for a 4% risk because I know how to hedge or recover, but I'm never going to send trades to the group that are like 4% risk. So US 30, so look at this hourly. So this is what we are waiting for. So even to trade US 30, until we get the best entry for US 30, or the entry for US 30 would be 2 hours from now. So right now is 9. So this will close at 10. So the closure of the 11 a.m. Eastern Standard Time candle, that is what will give an entry, either for a buy or for a sell. So US 30, I'm not looking to do anything with US 30. The only trade I'm in is gold. EU, we hit the weekly high, monthly high up here. We have 15-minute bearish highs and bullish highs and lows. So to me, these two opposing order blocks cancel each other. Also, I do not trade 15-minute bearish order blocks. However, what I'm looking for on EU, we have a 4-hour bearish high here and 4-hour bearish low. So if EU comes down here to around what is this, around 1.09270, and then we get a nice closure below, that's when I would look to sell EU. So EU, what I'm expecting, price to come around this 4-hour bearish order block, which for me overrides all the other order blocks that are around this zone, because this is the highest OB. And then maybe get something like this. If we get a closure and retest here, this is where I would sell EU to go back down. But if we go on the hourly time frame, literally looking at structure, EU can still go all the way up to around 1.10, 1.106 area. Because remember, this structure has to be completed more times than not. So EU might come to 1.10. That's the next psychological level. So yeah, so this might be a move. Probably better to enter like Sunday night or Monday London session, because today they can definitely keep pumping these instruments up. So I don't see any trade that we are gonna have on the live session. So today might be another day for questions. So you can see the crosses indicator, right? All these entries. This is why this is my favorite indicator. Because I did mention that for the crosses indicator, take the first 4 entries, including the original cross. So like yesterday, I was in sells. So I won this sell during, what was it, FOMC? Yeah, during FOMC. And then I won one other sell. So I normally say take the first 4. So 1, 2, so 2 hit TP, and then 1, 2, 3, 4. So 2 hit TP and then 2 hit stop loss. They did come close to TP, the third one and the fourth one, but the reversal to the upside hit stop loss. This buy yesterday, I know it came during the live session. However, I wasn't looking to take it. For those of you, I think there was only 3 or 4 people in the live session yesterday, but that buy did hit TP. So if you count the first 4 buys after the golden cross, and this is on the 15-minute time frame, so 1 TP, this other one right here, this buy right here with 100, and for this one I normally go for 100 pips TP and stop loss. So this one would have TP for that one, so 2, you'd have had 2 wins. Another one right there, 3 wins, and then 4 wins right there, and then you just get satisfied with that. No need to push for the 5th entry. Yeah, so you'd have literally, like, this is why I say, like, take the first, so 1, 2, 3, 4. So for me right now, if I was trading this crosses indicator on the 15-minute time frame, I would have been satisfied. I already have my 4 wins, because remember, right, requirement number 6, first 3 to 4 trades, including the original cross, are highly probable. So I just demoed it right now. And a lot of people yesterday, right, could have were trying to sell US 30. Even for us, like, I was personally looking for the reversal on US 30, but did not get as good as good confirmation. So this is why, even with the strategies that we have, you need to do a lot of back testing and then trust those entries. Like for me, this crosses indicator, it literally has like a 90 to 98% win rate. So when you get that buy and it's met all these 6 entries or confluences, there's no need to doubt yourself. Like go ahead and enter it, knowing that it has a 98% win rate or 90% win rate. If you get faked out, that's fine. The win rate is still, or the probability of you recovering just by taking each and every entry are in your favor. So remember, mostly after like a big push like this, the reversal does not always happen instantaneously. So remember, same thing like Steven normally talks about, when you have accumulation and then at some point you have manipulation and then you have distribution back. So before even a nice reversal can happen after a huge pump like this, always expect some sort of manipulation to the upside or to the downside. So in this case for US 30 would have been to the upside to trap both buyers and sellers. So they do know there are people who are trying to catch this reversal. So guess what they're gonna do? So they can do it both ways. So they're like, okay, let's trap these people who have sell orders right here and stop them out. So that's the manipulation. And then as they're manipulating, so the best thing with this indicator, right, you get to avoid getting faked out to the downside and you enjoy that manipulated move to the upside. So you make your profits here and then you're like, okay, I'm done. And then guess what? Right here, some people say, okay, wait, US 30 looks like it's going to keep pumping up. So guess what? People enter buys up here. And then guess what? The market makers bring price back down. So they've stopped out both sellers and both buyers. And on the way to the upside, guess what they're doing? They're just leaving their pending orders. So when price comes back down and hits those pending orders, that's why you see all this move to the downside, and then you can see a flash sell. So if you're literally using this strategy, the crosses indicator, guess what? You'd have already made your 2% return right here. And right now you'd just be waiting for sells. So you can keep taking buys. I think we back tested that during this push to the upside where we had like 24 entries and 22 out of 24 entries hit TP. But I would say no need to get greedy. You've already secured your 3 to 4 trades. Now wait for the sells and then you're golden. My second best indicator, or if you ask me, is the breakout scanner. So
I had
for
a question there about that indicator there. When you're taking those 4 trades, are those always you're gonna do 0.5% risk every time? So you're up
it,
2%, or do you spread that out through all 4 trades to make like 1 or 2, like 1% or 0.5%?
it depends on your risk. So for me, I don't trade. So personally, for me, my new strategy or my new way of taking trades, and that's why most of the trades nowadays I'm taking are 1% trades. So I have two defining factors on the percentage risk that I'll use for a trade. If a trade or if a strategy for me has a 90% win rate, or if the confluences give me like a 90% probability or win rate, I'm going to take that trade with a 1% risk. But if I'm seeing red flags in a trade, I will use, or red flags in a trade, or if I have like a 60 to 80% probability of hitting that trade, I'll use a 0.5% risk. So the
Right.
risk you use depends on the strategy you're using and the win rate of the strategy. So for me, if for this crosses indicator, if I was trading it, right, 1%, I didn't take any of this buys, but if I was taking them, I would have used 1%, 1%, 1%, because I know this indicator has like a 90 to 98% win rate.
I see. Okay. Sounds good.
Yeah.
Thanks.
So this other one, the breakout scanner, I prefer taking breakouts on US 30. More times than not, I like US 30. That's what I'm used to trading. But you can see we had breakouts on gold. This one hit TP yesterday. There was another breakout. The other thing, right, always be cautious, which is the reason I'm talking about the first 3 to 4 trades. You want to be cautious of taking buys. So like right now, if the 9 EMA comes back to like seems to be coming back down towards the 200 EMA, you really don't want to be taking those buys around that point, because that shows that price is more than likely starting to sell. So you really don't want to take those like a buy at this point. So if the 9 EMA comes somewhere close to the 200 EMA, you don't want to keep taking buys. Same thing here with gold, right? Like this breakout scanner, this entry for gold was perfect because the gold had just come from this sell zone below this breakout area and had popped all the way up. So this was a nice buy on gold. But you see, like right here, you're getting this buy, but this buy is within this breakout area, this shaded region, which means that gold might be coming back down. So as much as this would have hit take profit, you really don't, this is a very risky buy because price is in a downtrend. And gold more time, you know, a couple of times gold consolidates a bit more than other instruments. So for US 30 breakouts, I think US 30 also had a breakout yesterday. Yeah, breakout buy right here. So same thing, right? See this sell? So this sell right here, and this sell right here, these were perfect sells to take. This, however, were risky sells because price started to come back up to trend to the upside. So if you took any of this last three sells, this will, right? This is just a red flag because price had started being in consolidation and coming back to the breakout area. But this buy on US 30 was perfect because price had just broken up out of the breakout region, and you can see this would have easily hit full TP. This buy here also is a bit risky because price is now coming back to the consolidating or to the breakout area, and price can easily break out again for a sell. So for US 30, two major entries I'm looking for US 30. Number one, this confluence, this hourly candle to close below this trend line, and another hourly candle to retest and close below. An additional confluence I can have for US 30, guess what? I can come into the breakout scanner. I can easily get a breakout sell for US 30. Another entry I'm looking for US 30 is a breakout sell. I'm sorry, death cross sell on the 15-minute time frame. So if I get all of those three, I will be entering that sell for US 30. And for me, that would have like a 90% win rate. I'm sorry, 90% probability, because I have like my two best or my two top indicators giving me confluence for a sell. And even at that point, I'm pretty sure I would get this hourly close and retests and closure below. But so that's how I'll be taking trades today if that does come. But right now I'm only in the gold trade. I'm not going to get out of this gold trade. So we have this 4-hour bearish high. We also have an hourly bearish high, hourly bearish low, hourly bullish high, hourly bullish low. So to me, this hourly order blocks, opposing order blocks cancel out. And if I turn on the zones indicator, we have more sell pressure using a 4-hour bearish order block. So for me, I'm bearish on gold right now, and that's the only trade I'm in. EU to me is just too, I don't know. There's no direction on EU for me. In any case, I see EU going further up. Any questions from anybody? I know we have news in like a minute.
Just a minute. Yeah.
Yeah. So yeah, and let me know if you guys have any questions. If not, we can stay on for like 5 more minutes. But yeah, I don't recommend really trading today. So GJ waiting for a sell on the 15-minute time frame using the reversal indicator. So that's what I'm waiting. US 30, I've already gone over what I'm expecting or what I'm waiting on. Gold, I've already gone over that. What news do we have today? Consumer sentiment. Okay. All right, let me just send this update to the group. Yeah, so for me, I took a loss on GJ. I think for me, it was a 1.5% loss or something, because I lost like 3K on a 200K account. But yesterday I was up like 6%, so I can't really complain losing 1.5%. So this is another thing, right? Like that day, everything aligns for you. Like go ahead and take those trades and use like a higher risk. So long as a trade or something is like has a 90% win rate, like just go ahead and take it and use like a higher risk. Let's see, EU. I really don't want US 30 to keep. Yeah. So this is what you really don't want. You really don't want to be trading against this trend line, because here you can easily get faked out. But when we do get that confirmed move, like whether it's to the upside or to the downside, it will be so obvious. But you just want price to break out of this trend line in whatever direction. Yeah, I don't think I have much anything else to add. Any questions from anyone? All right. What else? What else? Yeah, I do not have anything. Okay, yeah, if nobody has anything else to add or ask, I will see you guys next week. Yeah, so go ahead and journal what happened. So when we have that FOMC with a conference like on Wednesday, and Wednesday is the middle of the week, and then Friday, of course, we expect manipulation. So normally, right, I talked about that, to wait after that 2:30 p.m. Meeting or conference to be over, and then normally a trend happens afterwards, and maybe through 11 p.m. of the same day, and then the trend continues. And then yesterday, you guys saw the trend that pushed up gold, and we were in a gold buy all the way down here. And actually, wait, this is US 30. We were in a gold buy all the way down here because I anticipated gold to retest this trend line to the downside. And then we had some demand. So yesterday, unfortunately, yesterday we were up 1%. However, that GJ trade, since we were also risking 1% on the GJ trade, we lost 1%. So we ended yesterday at break even. So that just brought us down to 3% for the month, which is still, right, way more than the month of May combined. So that's why you ideally need to use proper risk management. Even if you're risking 1% a trade, you can still risk 1% per trade and still have like a high win rate. The key thing is to always have a TP and stop loss for your trade. Let the trade hit TP and stop loss, because if you interfere with that trade, especially closing winners too early and holding on to losses, even though you have a 1:1 risk to reward, you will mess up your win rate or your growth for an account. So that's why for me, even for this gold, I'm telling you guys, I'm not closing this trade. I am still bearish on gold. As much as it came to 90% in profit, personally, I didn't close it out. If I get stopped out of this trade, that's fine, because I know the next trade, I just need one more winning trade to go ahead and recover that. So this is that's my new trading routine. I have a 1:1. I let TP hit, I let stop loss hit, because I know that all of these strategies we have, at the very least, they have an 80% win rate. So long as I'm letting TP and stop loss hit, at the end of the day, after X amount of trades, I'll still be up. So that's why I don't panic nowadays. I enter with a 1% risk, that's fine. And then I just let whatever happens. And that way I'm only taking, like this week, I think I've only taken 8 trades or about 10 trades, and I'm already up like, this week I'm up 10%. So, and I've literally taken losses. So I've sent you guys, I think after the GJ loss, I'm up like 8%. But if you look at the results I sent to you guys, literally, if you look at this, like this was yesterday, right? I was up what's 10K over 200K account? As much as I make money, I'm not good at math. I was up like what is that, 5% or whatever percent I was up. So I was up 10K. But guess what? I let the gold trade hit TP. I let this other gold trade hit TP. So can you imagine? So how many traders, or even ask yourself, right? If you're in this gold trade with an 8 lot and you're up like 1K, 2K, 3K, right? For most traders, and I was this way, even on the live session, not too far back, right? When I was doing this live sessions with you, sometimes I would say, okay, I'm closing at 50% profit, but I literally trusted that trade and let it ride all the way to full TP. So that's how you see the green strips. So knowing that I have a 90% win rate, or 98 with whatever indicator, or 80%, knowing that if I let this trade hit TP, guess what? I keep hitting, so that if I'm winning big. And if I'm losing, like this US 30 loss that I took here, this was a 0.5% loss. So hit a loss 0.5%, hit another loss 0.5%, and hit another loss 0.5%. So these 3 US 30 losses, and I literally let them hit stop loss, because if I didn't, guess what? See how far up US 30 pumped. So if you look at this loss I took on US 30, my stop loss was at 33,992. So 33,992 was literally here. 33,992 was here. So can you imagine if I did not let this trade hit stop loss, right? US 30 pumped all the way up here. So this is the importance of literally having a stop loss, and you just take like a small loss. And just by that, I only lost 1.5%, but I was already up like 10 or 8% or whatnot. So I can never sensitize this enough of having a defined TP and stop loss. If right, I really hope you guys take that into mind. I know for me, when people used to tell me that when I first started trading, I never really listened to them because I was always like, oh, it's gonna come back. But if you look at where my stop loss was, if I didn't have this stop loss, US 30 pumped like 500 pips. So at this point, can you imagine I would have blown that account and lost all my profits for the day or something? So as much as it hurts emotionally sometimes taking the losses, remember, it all comes down to risk management, so that when you're winning big, and when you're losing, you're just losing a little bit. If there are no last questions, that will be it for today. I will see you guys on Monday. Actually, wait, Tuesday. So Mondays, I have some other things to be doing on Monday, so probably we'll be doing the live sessions Tuesday through Friday. But I'll be sending the trades in the Discord as I see them and as I take them. And so long as they have a high probability, I'll be sending them out in the Discord. So it doesn't have to be on the live session, because nowadays I'm already heavily up even before the live session. So when I see trades, I'll be sending them in the Discord too. And there goes gold diving back down. So also, this is what you want to see, right? And I've mentioned this before. So see where gold is rejecting from. It's literally rejecting from the 4-hour bearish high and low. So this is the importance of trusting the trade and trusting the strategy you're trading. So this is what I want to see. So as much as gold came back to my entry area right here, what I wanted to see is gold rejecting from this 4-hour bearish high and 4-hour bearish low, which is literally rejecting to the pip. So just having that confidence of that trade, I just keep holding on to it. So I'm down 1.5% today, but if I win this trade, I'll be up like 0.5% because I'm taking this trade. I actually have a couple of sales. So yeah. All right. Any last questions? Perfect. I will see you guys on Tuesday, but I'll talk to you guys on the Discord. All right. Bye, guys.